A golden shield. Why central banks are stockpiling gold. Central banks are buying gold at an alarming rate, more than they have in decades. This should get your attention, as it signals a significant shift in financial strategy. They are preparing for something big, something that could impact the global economy. As an individual investor, you need to pay attention to these moves. Central banks are the big players in the financial world, wielding immense power. They manage a country's money supply and influence economic stability. Their actions have huge implications for the global economy, affecting markets worldwide. When they buy gold, it's a signal that shouldn't be ignored. They are worried about something, possibly economic instability or geopolitical risks. Why are central banks so keen on gold? What drives this demand? The answer is simple: protection against uncertainty. Gold is a safe haven asset, trusted for centuries. It holds its value during times of crisis, unlike many other assets. Economic uncertainty? Gold is there, providing stability. Political turmoil? Gold is there, offering security. Inflation going wild? You guessed it, gold is there, maintaining its worth. Economic storms brewing. Gold as a safe harbor. The global economy is facing strong headwinds, with uncertainties looming large on the horizon. Inflation is stubbornly high in many countries, eroding purchasing power and creating financial stress. Interest rates are rising as central banks try to get it under control, making borrowing more expensive. This aggressive monetary tightening has put pressure on global growth. Recessions are looming, threatening jobs and livelihoods. The stock market is volatile, with wild swings causing anxiety among investors. This economic instability is driving central banks to seek safety, looking for reliable assets. They are turning to gold as a hedge against uncertainty, a time-tested strategy. Gold is a tangible asset, something you can hold in your hand. It's not subject to the whims of politicians or central bankers, providing a stable store of value. It's a store of value that has stood the test of time, weathering countless economic storms. The devaluation dilemma: protecting value with gold. Central banks are also worried about currency devaluation. When a country prints too much money, its currency loses value. This is happening right now in many parts of the world. Governments are printing money to fund their spending. This is leading to inflation and a decline in the purchasing power of their currencies. Gold, on the other hand, is a scarce resource. It cannot be printed out of thin air. This makes it a valuable hedge against currency devaluation. When currencies fall, gold tends to rise. Section 4. Geopolitical tensions rise. Gold's role in uncertain times. The world is becoming an increasingly dangerous place. Geopolitical tensions are rising. The war in Ukraine has highlighted the fragility of global peace. The relationship between the US and China is strained. These tensions are creating uncertainty in the global markets. Investors are looking for safe havens. They are turning to gold as a way to protect their wealth. Gold is a neutral asset. It's not tied to any particular country or economy. This makes it a safe bet in times of global uncertainty. Section 5. Securing your financial future. How to invest in gold. Investing in gold can be a smart way to diversify your portfolio and protect your wealth. You don't need to be a central bank to own gold. Even individual investors can benefit from adding gold to their investment strategy. There are several ways for individual investors to add gold to their portfolios, each with its own advantages and considerations. Gold ETFs. These are exchange-traded funds that track the price of gold. They are traded on stock exchanges just like regular stocks. They offer a convenient and liquid way to invest in gold. You can buy and sell them easily, making them a flexible option. Physical gold. You can buy physical gold in the form of bars or coins. This is a tangible asset that you can hold in your hand. This gives you direct ownership of the metal. However, it also means you need to think about storage and security. It's important to store physical gold securely. Consider using a safe deposit box or a home safe to protect your investment. Mining stocks. You can invest in companies that mine gold. This option allows you to benefit from the operational success of these companies. This is a more speculative option, but it can offer higher returns if gold prices rise. Be aware of the risks involved with mining stocks. The best way to invest in gold depends on your individual circumstances. Your financial goals, risk tolerance, and investment horizon all play a role. Talk to a financial advisor to determine the right approach for you. They can help you navigate the various options and make an informed decision. Section 6. A call to action. Protect your wealth with gold. The message from central banks is clear. Gold is an important part of a diversified portfolio. It's a hedge against economic instability, currency devaluation, and geopolitical uncertainty. In these uncertain times, it's more important than ever to protect your wealth. Don't wait for the next crisis to hit. Consider adding gold to your portfolio today. Your future self will thank you.